Hi, this is Kevin Schumacher with the Kevin Schumacher Team here at eXp Realty, bringing you this month's Market Trends Report. Trying to look at 2020, what a crazy ride it's been. I know there's a lot of uncertainty and people wondering where we're going with the housing market, and hopefully we can deliver a little bit of clarity and sort of reflect back again at last month's numbers and give you a little better information, and so you can walk away and be a little bit better informed as far as making financial decisions and your future, potentially your future home purchase. So let's just sort of jump into some of the statistics that we continue to accumulate and acquire on an ongoing basis from a lot of our national economists that are out there. And one thing that is a common conversation is the recovery. And so what was once predicted is a V-shaped recovery. And what you look at is the prediction versus actually what happened, which is a great sign, because even though there's been a lot of businesses that are still struggling, we are starting to see people come back. When you look at the pandemic that's going on, we're approaching the time where it's going to get difficult, but yet there's that light at the end of the tunnel that maybe that vaccine is coming. So there's a lot of things that are really driving consumer confidence, and obviously that consumer confidence is a wave, but hopefully we're starting to see that get a little bit more consistent on the confidence side. When you look at how most Americans spent their stimulus check that they received in the mail, you'll see that most Americans actually either saved it, a third of them saved, a third of them paid off debt. So what we are seeing is we're seeing a lot of Americans and buyers and sellers that actually have improved their financial situation, which is a great thing. When we look at consumer spending nationally is within 3.7% of what it was pre-pandemic, and when you look at sort of the mustardy gray, mustardy brown colored shaded areas, all those areas, which is a good portion as well, are at least below 10%, and hopefully approaching some faster recovery as well. The other thing we look at is unemployment, and unemployment has continued to be on a downward trend. We are starting to see it flatten out a little bit. Hopefully, going into the holiday season, some of those jobs will continue to be absorbed. Hopefully, businesses can stay open with the pandemic as well. Fingers crossed. But we are starting to see that flatten out a little bit. Hopefully, we'll continue to see additional decline in unemployment. When you look at the graphic here, it shows the number of people that are actually receiving unemployment, and when you see that number is actually going down as well. So again, just good signs that people are either getting their jobs back or that there's also more job creations happening. So the other big thing that we look at, inventory. So that is one of the biggest challenges across from east to west coast. That's the biggest challenge that we all face, especially here in the Colorado Front Range, which we'll dive into in a few minutes. But when you look at the national levels, it's actually the national levels at 2.7 months inventory. So when you go look at a normal market, the normal middle ground is 6 months. So anything below 6 months is going to lean towards a seller's market. Anything above 6 months would be more of a buyer's market, creating more buyer opportunities. So when we look at the year-over-year change in inventory and how inventory hits the market, you can actually see that the inventory currently is being consumed faster. As it hits the market, it's being consumed faster than it can be replenished, which is obviously a big problem. So what happens in these scenarios is when you have inventory that continues to shrink, you have upward pressure in pricing because you're having multiple offer situations and people that are more motivated. Let's say they're relocating and they need a home to buy, or they're coming from other areas that where the perceived value is much higher, and so they're willing to pay a little bit more money for it. So a lot of different variables that go into timing of when it's best to move forward on that purchase. When we look at the top reasons of why people aren't listing, like why is our inventory down? So the survey basically stated that number one, well, the top three. One is that financial uncertainty. Number two is life uncertainty, just not knowing what's going to go on. And then number three, which we all would predict, is the COVID-19. Maybe it's the unknown of, if things get shut down, will I lose my job? All of those other variables. But those are the top three things. Now, hopefully, as we get into the first of the year, we'll continue to start to see that loosen up a little bit, and then which obviously then will give people the confidence to go ahead and move forward in selling their homes as well. The other driving force is interest rates. So when we look at interest rates, they're below 3%. So when we look at those rates, those are driving the force of affordability. So again, we have many clients that have been in their homes for 3, but maybe 5, 7, 10 years. They want to maximize their equity position, but take advantage of the low interest rates. So that obviously is a driving force, and they predict that we are going to start to see next year interest rates slowly move up. They're not going to spike up, but they will slowly move up. So the one thing that we always want to bring up to our clients and our friends and family is what does 1% do to your buying power? So an example, at 3%, let's say a 3% interest rate, for just hypothetical numbers, a 3% interest rate, let's say your mortgage payment is $1,500 for easy numbers for a $300,000 mortgage. In order to maintain that $1,500 payment, if rates go up to 4%, that lowers your borrowing capacity by 10%. So that means for the same $1,500 a month payment at 4%, you're now at $270. So when you go and look at a lot of the buyers that are in the market trying to acquire that first home, or maybe they're living in a small home or small condo and they want to make that next jump up, that definitely makes a significant impact on what they can buy in a market that already is facing price points that are going up quicker and quicker. So just something to talk about, and obviously myself and the team are always happy to break down those numbers for you as well. So so we have mortgage rates, obviously a driving force, and inventory. So let's jump into the real numbers of what's been happening in the last 30 days. When we look at Larimer County, 582 homes currently on the market in Larimer County, 613 actually sold last month. That number is actually down about 2%. And we're looking at days on market, 72 days, average days on market, with an average sales price in the month of October, $544,000, and 1.2 months inventory. What that means is if not one home not one home hits the market, we would be out of inventory in a little over 30 days. Okay, so let's jump into Weld County. 655 homes currently on the market. Last month, 530 homes actually sold, and that number's down 12% compared to the previous month. 62 days, average days on market, with an average sales price of $417,000. We rewind back about 6 months, that number is 313. So again, just a lot of upward pressure in the average sales price, okay? And we're looking at 1.2 months inventory, same as Larimer County, as far as actual months inventory. Boulder County, 383 homes currently on the market, 342 homes actually sold in the month of October. That number is actually down by 5%. Average days on the market, 50 days on the market. Average sales price, $882,000. And then average inventory, we're looking just right at 30 days inventory. That number is actually down by 21%. So that number is continuing to move down. The thing to keep in mind with all of the days on market for Larimer, Weld, and even Boulder County is that what it tells us is there's a lot of upper end inventory that's sort of sitting, or maybe that people have put on the market and they're speculating. And so what it's doing is that's skewing the average days on the market. So when you look at inventory that's below the average in that $400,000 range, let's say, those homes are selling within the first 5 to 7 days. So I want to make sure I clarify that, because it's still a very, 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 very active market. And then we go into Metro Denver. 1,431 homes currently on the market. 3,197 homes actually sold in the month of October, which is crazy. That number is actually up 21% compared to the previous month. 22 days inventory, $582,000 is the average sales price. And get this, 15 days inventory. Only 15 days inventory in the marketplace, which that number is down by 37%, which is crazy. Again, I had a client just yesterday ask me, like, wow, that must be great to be in real estate. Well, it's actually challenging. And what's challenging about it is because, again, it's such an active market that's, again, starting to have upward pressure in pricing, pushing prices up, and also creating multiple offers and pricing issues. So what I would encourage you to do is, if you're thinking about buying or selling a home, is now's the time to really sit down and evaluate what your situation is, what's your goals, what you're wanting to do, because a lot of people one of our economists was saying there's a trend of people sitting on the sidelines waiting, thinking like, well, let's wait to see what the inventory does. But what happens is there's still such upward pressure in pricing that you're leaving some money on the table. So one, you may gain here, but you don't want to end up spending that much more here. And then also with interest rates. So a lot of variables. And what, again, I encourage you guys to do is just reach out, let our team evaluate your situation and how we can best help you fulfill your needs for you and your family. And then the same thing goes with investment and building your wealth in investment properties. Now with low interest rates, we're definitely seeing some investment opportunities for many people as well, because we continue to see that rise when it comes to the cost and rent and so forth. So again, as always, we really appreciate you taking the time to listen to us and bring this valuable information to you. We appreciate the referrals. That's how we grow our business. We're here to serve you. If there's anything we can do to help, please let us know. You can always visit us online, kevinsellsco.com, or call us at the office 720-230-3030, and myself or one of my sales partners will be happy to help you and give you clarity and information on the market.